Hi, this is Peggy from Roar. So today our guest is Corey Gross, the CEO and co-founder of Sensibill. So thank you so much, Corey, for being with us today.
Very happy to be here. Excited to talk to you.
Thank you. And so Sensibill provides financial tools helping FIs better know and serve their clients. So you have an extensive experience in the space. So really looking forward to hearing your thoughts in the new normal in financial services.
Absolutely. Absolutely.
Let's get started with that first question. So from your perspective, what will be some of the long-lasting impacts of COVID on the financial services industry?
Yeah, I think, right now banks have obviously looked very swiftly to helping people get government stimulus checks in their account. Right now, the react phase of the response to COVID is kind of winding down. But however, there are still a lot of people who are out of work that are stuck in limbo before the economy reopens. And a large worry that a lot of these people have is, what's going to happen to their credit scores if right now they don't have the cash flow to pay off any loans or debt they might have, when prior to COVID, they might have been in very strong financial standing. So what you're seeing are credit score providers like Equifax, Experian, and others providing a little bit of a holiday for customers to provide them the appropriate time to get their credit in order and get their bills paid. And financial institutions are obviously supporting those people, small businesses and individuals, so that they don't face the world of hurt that a situation like this can do to their credit. So I think over the next phase of recovery and thereafter, there's probably going to need to be a little bit more sensitivity and a little bit more context paid to those who are in credit trouble. So this is government and other bodies providing direction to financial services providers to allow people to find the appropriate time to get back on their feet. I think you're also seeing the introduction of new and innovative FinTechs to help people get paid quicker and on time and more accurately. Obviously, there was a lot of news paid to PPP in the States. And that's something that is obviously inspiring a number of companies that may not even be FinTechs to step in and try and help governments and financial institutions get these people paid. So usually during times of, I don't want to say economic strife, because this wasn't necessarily a crisis caused by a failing banking system or financial services turmoil. It was caused by something else entirely. But you usually see companies step in to innovate in areas to alleviate the pain customers are going to feel. So this is my long-winded way of saying that some of this is going to be immediately responsive to the pain people are feeling in the short term, and they'll help people gradually get back on their feet. It will also inspire a number of companies to make sure things like this, namely the speed of processing payments for people and alleviating credit stress, don't become reactive issues. There's already mechanisms in place to deal with it.
So you mentioned credit score. It's a topic I'm very passionate about. I really don't think the way we assess credit is working already very well. So in terms of regulation, aligned with maybe credit score over regulation, what do you see coming out of the crisis?
Yeah, I think credit score adjudication is I could probably talk for a while on this. It's something that I'm very interested in as well. I think there are clearly perverse incentives to drive people to improve their credit, and oftentimes those people don't necessarily have the means to properly manage that. So, in other words, you're incentivizing people to take on debt that they may not necessarily be able to take on. And what that does is it prejudices people who can't afford to take on debt, and namely those people come from lower socioeconomic standing. So then you have the effect of excluding those people from participating in a broad range of financial services products and services that would otherwise better their situations if they had access to them. So I agree with that. Do I think that regulation will step in to fix that? I don't, because I don't know that it's a regulatory issue. I think it is a business issue. The way banks make money is is by having people take on credit and not fully, pay off their balances. It's by taking on credit to otherwise provide them cash flow to live their desired life and standard of living. And that might mean that they're paying interest on an outstanding balance every month, and banks are just fine with that because it suits their business model. And I think that the banks in general have been very, very vocal in supporting people, but I don't think that they're reacting in a way that they might have following the 2008-2009 financial crisis, because then it was clearly a crisis and recession brought about by financial services, and they were kind of forced to look at themselves introspectively, and government was forced to take action, not just in North America, but obviously in the UK and in other parts of the world, to make sure this kind of thing didn't happen again. The banks, for the most part, don't believe that they had any role to play in the economic collapse that was brought about by COVID-19. And so I don't think there is a case that's strong enough for regulation to step in to say, hey, and this should not happen again, or we should place tighter controls to make sure something like this should not happen again, because the banks perceive themselves right now as facilitators and helpers, not necessarily, a party that caused this downturn.
Okay, thank you. And so in terms of new financial orders, new global order, what do you see panning out after COVID, or at least starting to pan out right now?
Yeah, I think what has always interested me, and certainly has been since Sensibill was founded, it was that there's going to be, it's not going to happen in a year. I'm not one of these FinTech executives who is hammering at my desk that, banks are over and technology companies and FinTechs are going to rule the world, and there's no place for incumbents. In fact, our primary business is supporting incumbents. We want to service people in the broadest possible way. I mean, we truly believe that financial services needs to be democratized, and in order to deliver value at the scale that we aspire to, it means partnerships with big banks. It doesn't mean trying to take them down by starting a competitive bank. But what I have been cognizant of, and I've been talking a lot about, is that big banks ought to pay more attention to big tech, because it was easy a couple of years ago, and it has been fashionable around the world, not so much necessarily in Europe with PSD2 and open banking, but certainly in North America, to look at upstart fintechs and neobanks as small potatoes and as French fries and as non-threats to their business. And that might be fine. I mean, you'll get opinions from people who believe that those are true challengers to the status quo or not. But when Amazon and Google and Apple and Facebook and other large financial services providers try to enter financial services, or non-financial services providers try to enter financial services, I think banks ought to take notice. And the reality is, during the course of this pandemic, people have building closer relationships with Google and Apple and Amazon and Facebook. That's where they're doing the majority of their ordering and their purchasing is on Amazon. Mm-hmm. They're cuddling up with Netflix, not going to the local Cineplex to see the latest blockbuster, right? So the relationships that are forming even stronger ties on the payment side on online with Apple Pay. And obviously you have Shopify, which is becoming a big player, not just in the shopping sphere, but now in the financial services sphere. You're seeing a real shift of where relationships are going to be, where the investment in relationships are, and it's with technology companies, especially if I can't go to the branch to strengthen my relationship with Janet or Ian, my local banking manager. And let's just be honest, it's not the same trying to talk to people about your financial picture over the phone informally than it is when you're, in a suit or dressed up nicely, having a formal meeting about your family's financial picture in person. And that's the kind of relationships that incumbent banks have long prided themselves on having. And what do you do when that breaks down? Because you don't know what it's like to have a very strong digital relationship with someone. That's new to your business. Whereas the large technology companies have done that, and they've done that at scale for many, many years. So when those companies get more involved in financial services, that starts to indicate to me a little bit of a change in how banking and financial services are going to be conducted over the course of the next several years. So that's where I see the big shift happening from COVID, is big technology companies getting more involved in providing financial services in a much more personalized way because of the relationships that they're strengthening during a time like this.
So would you see this dynamic a bit in terms of resetting competitive positioning where big tech is going up and incumbents are trying to keep the same edge by partnering with companies like yours, for example? Is it the way you see the world of tomorrow?
Well, I think that there's been a lot of talk about FinTech partnering with banking, and I think that banks have historically looked at FinTech partnerships as nice to haves, unless that they were serving mission critical applications, and to be honest, there aren't many of them. But I think the attention that banks ought to be paying going forward is not just what they would call a mission critical application, whether that's authentication, whether that's compliance, core banking, that kind of thing. It's really about how can we best support and serve our customers digitally. It's about digital transformation in a way that's much more broadly than serving up banking services digitally. It's about creating more touch points and strengthening relationships and understanding customers and their context way better by the way that you ingest and utilize data, especially new alternative data sets, which is kind of the space that we play in. And that's an investment area that has always been minimized as being a value add, a nice to have on the part of financial institutions. And I think it is incumbent on them to start spending, and not just spending on these initiatives as innovation items, as sort of as POCs, and let's wait and see how the market responds to see what's table stakes, but something that they actually drive with a purpose. That's what technology companies do. They have conviction about a particular product or service. It doesn't mean that it pans out in the most perfect way, but at least they gave it their best shot. And Google has had plenty of misses, right? Like think about Google Buzz, think about Google Plus, right? They were in the Plus game before Disney Plus and Apple Plus. Like they were creating products with pluses on them way back when, and they were not successful solutions, but they sure leaned into them and put their weight behind them. Mm-hmm. And if they weren't going to work, it was because the customer didn't embrace it, and it was because there was a better solution to whatever problem they were trying to address. Banks don't think that way, and a lot of banks right now are trying to pride themselves on being technology companies. But it's not just about delivering a technology solution. It's about having a product and customer-centric mindset that makes you more of a technology company. And I think that's the kind of attitude that banks are going to need to have to adopt, because that's how Amazon thinks. That's how Shopify thinks. They think about, they have a strong idea of who their customer is, and they create a loyal following amongst their teams and their partners to solve the problems relentlessly that their customers might face. And if you're Shopify, and you have a number of small businesses that are hurting right now and aren't getting the right amount of service from their incumbent financial institution or their primary bank, they're going to extend their helping hand in the same way Amazon has done for their small businesses by extending credit to their marketplace vendors for years now. And that creates loyalty, and that creates trust, and that creates stickier customers, and that opens the door to profitability of those customers over time. So I think that's what you're going to see more of, is big tech take shots where they think they have an opportunity to disrupt the traditional financial relationships.
So if I look at the incumbents, of course, we spoke about strategic partnership. Where do you see traditional FI going above and beyond that? Of course, there's a lot of challenges to be addressed with cyber attacks. That's something that usually has not been, top of the agenda. Impact investing is taking more and more, mind share in clients. You spoke already about compliance, and when you have stories like Wirecard, obviously that's also something that's top of mind for people. Where do you see the areas where FI could play in digital transformation above and beyond, like this connection with maybe new products for their clients?
Yeah, well, I mean, number one is the way you service your customers. and you're already seeing a movement towards chatbots and conversational AI as a way of servicing clients virtually, moving away from analog or voice and towards digital. And that's been, there was for a very long time, and I'll be open and honest. I was not a buyer on chatbots for a little while, and it was because I didn't think the technology had caught up to the way people want to have conversations with a service provider, especially financial services providers, right? When you really have a burning pain about your money, and that's usually true of when you're calling a telco, you're probably calling to complain about your bill, and you don't want to talk to a computer to complain about your bill because you probably want something for it, not the least of which you want your time compensated or whatever damage you might have suffered. But I think the technology here has reached a place that is not only saving operational expense on the part of the FI. We know that there are some conversational chatbots and AI that can save up to 40 to 50% of overhead in terms of servicing and supporting customers over digital and voice, or over analog and voice, but also answering more complex questions for customers about how financial services products work. And I think that's actually, and serving them insights about their own habits and products that might inform how they, manage their wealth, or what other products and services they might need to subscribe to, and what about their own current financial management needs correction and they should be aware of. I think, it's arguable that even face-to-face interactions with a rep don't fully address these questions with the level of transparency and education that customers desire. So I think where chatbots and conversational AI can play a role isn't just in giving people answers to their questions, but also educating them on how some of this stuff works. Because I don't think that humans can always get that right. And right now we live in a world where, you think about digital transformation, a big part of this is digital onboarding. It's about having people communicate technical concepts to you in a very human way. And great chatbots can kind of dumb down the mumbo jumbo of how credit cards work and how RESPs work and how mortgages work to a layperson. And I think that's where you're going to see a lot of investment from financial institutions over the next little while.
Okay, thank you. That's very helpful. Last question, a bit more personal. So what has changed for you in these last few months? Did you pick up good habits, old habits? We spoke offline about the fact that we're all working way too much during this pandemic. So any good habits maybe you picked up?
Yeah, good habits. I mean, transparently, I don't know. I think, like we were saying, it's kind of like I feel more highly regimented in my day-to-day life than I did even when I was working in an office, because every day kind of feels the same, whether it's a Monday or whether it's a Saturday. And it's kind of get up, take care of your children, get right into your chair, meeting, and all the interactions with people that you can take for granted in a physical office environment that would ordinarily take 2 to 5 or 10 minutes. Now are meetings on your calendar, right? So those informal interactions are now formal meetings, and I hate meetings. I'm absolutely a death by meeting enthusiast, right? Or I would say, like, someone who doesn't want to spend most of my day in meetings, and I had to carve off my days and my weeks for productivity time, thinking time, and personal time to guard against that. But it is so easy to get sucked into that trap. And then after you go through your day, of course, you've got to get the family fed and ready for bed, and then you try to have something of a life, personal time, hanging out with your wife in my case, or maybe going for a walk and focusing on jumping on the treadmill or going outside, right? So I would say, like a lot of people, I'm trying to find ways of taking care of myself, even though it's so easy to get in the rut of being stuck in this chair all day.
Yeah, that's for sure. It's been an interesting test for most of us to see, okay, can we be disciplined not to work too much. It's a silly thing to say, but actually you have to be disciplined not to work. I thought I would never say something like that, but
It's like the reverse. It's like a
yeah,
reverse where before it was easy to find distractions, but when you have no distractions, it's it takes discipline to find them.
exactly. Well, thank you so much for taking the time today and sharing your thoughts. It was wonderful to get your insights, and have a great afternoon. Enjoy your family. Hopefully, you're going to be able to finish a bit earlier tonight, and have a great time and a great weekend soon.
Thank you very, very much. Happy to
Thank
be here.
you. Bye, Corey.
Bye-bye.